Welcome, everybody, to the Savvy Investor Raising Capital Investor Series. I am your host and presenter today, Michael Ponte. For those that don't necessarily know me, I'm the founder of the Savvy Investor Network and the Network Group, and also longtime Canadian real estate investor. As you guys are joining us, let us know who's here. Give us a wave. Say hello to me. Let me know where you guys are dialing from. It's always great to see everybody. Especially on a sunny Sunday afternoon of all times, on the weekend. So again, so great to see so many wonderful people joining us as well, joining us live. So again, welcome to the series. This is going to be a 4-part series of one of my favorite topics, raising some money. Anybody else looking to raise money, or is it just myself? Nice to see you, Chasten. It's great to see you, buddy. But again, yes, we're talking about one of my favorite topics, money, raising money, because raising money is going to help me get those deals. Anybody else looking for money to raise for their deals? I'm not sure. Okay. But for those that are possibly getting started or even looking to really scale their business, they can find a lot of struggle in this, in the capital raise side. And, and this is the one thing, if you're trying to grow your business, if you don't have money, not to be concerned, and you're not alone feeling frustrated and challenged in regards to trying to find this capital, because it does take some time. And so with that being said, for those that have been in the industry for a very long time, they know that they have to partner with they need to partner with people or use private funding or private lending to really expand and grow their base. Okay, so for those that don't have money at all and they don't know where to begin, not to worry. There's multiple ways to do this. And this is some of the things that we're going to be talking about in this series for sure. Okay. So the question really is how do we do this and where do we find the money? If this sounds like you, comment below or comment so I can see you guys. And so if this is feeling like yourself, is you don't necessarily know where to find the money or even how to do this. And again, you're not alone. There's lots of people that struggle with this thing, and it's a very, very common discussion. So there's a lot to talk about, and there's just no way we're going to be able to facilitate this in just one day, which is why we're doing it over 4 days in sequential order. So today we're going to be talking about more of the basics of how to find, the basics of how to joint venture. Okay. And that's the key. Okay. So before we just get started, I just want to also remind everybody that I can see everybody's comments and I can see people here as well. I can't see you physically, but truthfully, I can see your comments. I love to make my sessions interactive. So please share accordingly. Get those keyboards running along a little bit. Make sure they're nice and warm. And to help you going, if you haven't already, please do me a small little favor. If you haven't subscribed to our channel, please take a moment to do so. It is one of my goals for this coming year, and help me accomplish my goal is to hit about 1,000 subscribers for our YouTube channel. So with that being said, any of your support would be greatly appreciated. Secondly, I just also want to highlight, if you haven't already, make sure you go to thesavvyinvestor.ca. So thesavvyinvestor.ca website. There's lots of great resources, and a lot of it is absolutely free. So take advantage of it for yourselves. And it also keeps you guys informed of upcoming events that are going to be coming up as well. Okay. So with that being said, let's kind of get to the topic at hand, and it's, where am I going to find this wonderful money? Let me just kind of change the setting a little bit here. So let's kind of just maybe highlight some of these key things that we're going to be talking about. But before I kind of get started, I've always got to put that wonderful legal disclaimer, because it's really, really important. And I guess for everybody that's just getting started raising capital, or for those that are actually our money partners looking to find real estate experts, my disclaimer to all of you is, take a moment and make sure you get some legal advice before doing so. So before you do a joint venture partnership, before you raise any capital, talk to your lawyer first to make sure you got the right advice. So the content that's going to be shared over the next 4 days are really based on guidelines and things that I have done personally myself that I'm happy to share, but it does not substitute good legal advice, because at the end of the day, your situation may be very, very different than mine, and it's really, really important that we get that clarified for you before you jump down this road. So topics that we're going to be going over for the next 4 sessions, just so everybody knows, and for those that are going to be partaking in all 4. So today, how a joint venture partner works and the pros and cons. We're going to take it down to the basic fundamentals, because for a lot of people, this is a new topic, new subject. Tomorrow's session, where to find those money partners, and presenting to joint venture partners and how to do it effectively. So we're going to give you guys some great tools and tips in regards to how to present accordingly, structuring your joint venture partnership. There might be some eye-opening experiences there because we talk about it a little bit differently. There's multiple ways to structure your joint venture partnership, and that's where we're going to spend some time with that. And of course, last but not least, we want to have a successful relationship with our money partner or real estate expert. So what are those tips and advice that you can do to make sure your joint venture partnership is going to be strong, not just for the next 3 to 4 to 5 years, but hopefully for multiple years to come as well. So that is what's on the agenda for the next 4 days. Hopefully you guys will be able to join us for all 4 days because it's going to be a fun-filled event, lots of great information, and it will be very, very helpful for you. So who wants to be this kind of guy right in the middle here and just being able to collect all this cash and this guy in the middle, just all this money kind of raining on them? Anybody? Just show of hands just on the comments. For me, I would love to be this guy. I want to be this guy, and I love it. And I'm actually kind of happy that I am somewhat reasonably that guy. But truthfully, when you learn how to raise money, the problem that you're going to have once you've learned how to do it effectively is not being able to find money. It's actually finding deals. In some cases, you'll have too much money and you just don't really. And the biggest problem that you're going to face is actually not necessarily knowing where to park that cash. Anybody want to have that problem? I'm not sure if anybody else wants it, but truthfully, it's a common occurrence, especially with my students. That we talk about it and we start the discussions from the very beginning, and they're just like, Mike, wouldn't that be a nice problem to have? I got too much money, but I just really have no opportunity I just have no deals. And so that is a very common occurrence. If you talk to any seasoned investor that's out there, including myself, trust me, you can get to that point. There are millions, if not billions of dollars looking to go and be used to get better opportunities and get a better return on their investment, especially in this day and age. So I can't enforce this one enough. Follow some of the tools and tips to help you over the next 4 days, but it is a problem that is very common. The trick is, how am I able to connect with those money partners, present to them effectively, and more importantly, have that very similar problem that these other individuals have as well. Okay, so for a lot of people, the biggest way that people do this and how they start to scale their business is through joint venture partnerships. It's a very common thing for a lot of people. They may have heard of this, but they just may not really fully understand what this really means. And that's okay, because that's part of our dialogue today. Is I thought I'd pull out the old good Wikipedia and to go over the definition and to break it down to the most simplistic format. Again, because this can be a brand spanking new topic for everybody, and people will hear joint venture, but they just don't really understand it. And so that's what this discussion is going to be. So let's take it down to the most simplest form right now and just talk about what the definition is to start with. So a joint venture is a contractual business undertaking between two or more parties. It is similar to a business partnership with one key difference. A partnership generally involves an ongoing long-term business relationship, where a joint venture is based on a single transaction. Okay, so individuals and companies choose to enter joint ventures in order to minimize risks, increase competitiveness, and advantages in the marketplace. So that is the definition of joint venturing. Okay, so at the end of the day, it is really kind of bringing resources together. Somebody will have capital, the other person will have experience and knowledge, and bringing these two individuals or companies together, where at the end of the day, it benefits both sides. Okay, and you will see this all over the place, especially when it comes to companies. All the time, it's a common occurrence. Okay, so you've got individuals that are maybe looking to dabble into a new type of business format or business strategy, but they just don't have the ability to do this, or they just don't have the knowledge. So they actually partner up with somebody else to actually manage that. And that same company that is looking for money capital will find another resource together. So together, they're coming together at the end of the day with the main intent is to be making some money. So that is the main reason why most companies do this. Okay, so in the real estate world, it is so very similar. You've got real estate experts that got deals. You've got money partners that have got money and they are collaborating together with the same kind of objective. Okay. So let me pose a question to everybody here and just reference it in the comments. So here's the question. Let's take it to the real estate expert side first. Why do real estate experts want to joint venture? Why do they want to find money partners? What would be some reasons that they are looking to joint venture with somebody? Okay, so share that in the chat. And I'm just going to share a quick story as everybody's posting. And again, please share in the comments. I can also post it as well for everybody. But with that being said, I started many years ago, and this is the reason why I started joint venturing many, many years ago. So I bought my first 3 properties on my own. And guess what? Just like everybody else, we ran out of money, no money. And secondly, the banks were like, Mr. Ponte, you're kind of done. At the bank side of things, they're like, you're done. We can't give you any more mortgages. You're tapping out, right? So with that being said, I was working as, I said, okay, here's an opportunity. I just need to raise money to continue to expand it because I see an opportunity in this real estate investing game. I love it. It was fun. And I don't like anybody telling me that I'm going to stop. And so for myself, I was working as a sales director for a major national company. And with that being said, I thought, I was negotiating major contracts and all this stuff and very, very heavy in the business community. And I'm like, oh, this should be really, really easy to raise $50,000. Easy. 100,000, nothing. Right. So I felt very, very confident in myself in regards to being able to do so. Okay. So with that being said, I built this massive presentation, 40 pages, massive binder, 40 pages of stats and market analysis and cash flow analysis, return on investment returns and returns. And I felt like I was just ready to hit the street and just kill it out there and raise millions of dollars. Right. And that was my first perception. So first presentation, sat down with the client for 3 hours, three hours straight. And it was me talking nonstop the entire time, all the way to the end. And then you had those words. And if anybody's in sales, these are the words of death. Let me think about it or I'll get back to you. Those are not good words. Okay. So for anybody's in sales, they all know what that means. And for those that want to take a guess what that means, that's just like not going to happen. So 20 plus presentations later. Okay. Not a lot of success, to be really honest with you. And I remember one night going home with a tail between my legs and told my wife, I'm like, this is not working. I don't know what I'm doing so wrong, but I'm doing something really, really wrong. And she's like, you know what? Pitch me with this. Let me hear your pitch. And so quickly within the first 7 minutes of my rambling on, she came to the conclusion and realized that I was really talking about myself and the deal. And she asked me, when are you going to ask and talk about what's important to me? They're there to want, and you should be asking a lot of these types of questions and making sure you get visibility of what is important to me. And if there's a true relationship and a true partnerships and understanding exactly what their goals and objectives are. And are you able to accomplish and support what they are striving to be? And it was kind of my aha moment where I kind of needed to shut up and do a lot more listening versus a lot more talking. And that was my first kind of aha moment when raising capital. And shortly after, I changed the way I did things. And then more importantly, I started to raise, instead of closing 0%, I was closing at kind of around 95%. And it was a significantly higher close rate than what it was before. Now, it was probably very easy for me to give up. Okay, really give up. But I really wanted to achieve my goal. Some of you may be in the same position right now as they're like, I'm trying to raise money. I'm struggling. I just can't seem to have success. And if that sounds like you, don't be afraid to raise your hand if that's you, and that's okay. And that's part of what we're talking about over the next few days. The important part is not to give up. You just may need to change the way you do it and present yourself. Okay. But so some of the key reasons why many real estate investors want to raise capital or are looking for money partners, and there's a lot of good answers that popped up, are these ones. Okay. So obviously the real estate expert is looking for joint venture partners or money for these main reasons. So number one, they run out of money. Very similar to myself, and I just had no money. I wanted to continue to do what I'm doing because I loved my real estate investing journey and I couldn't do it. Secondly, to add insult to injury, the banks weren't going to give me any more mortgages because I was tapped out. And that may be sounding like you too. And if you got to that 3, 4, usually 4 properties, the banks are kind of shutting you down. You're like, well, I give up. There's nothing else I can do. Well, that's not true. There's lots of things that can be done. And so one of the ways to do this is by raising capital through joint venture partnerships. Other things that people are looking to accomplish too is they're looking for bigger deals. Anybody here wanting to do bigger deals like multifamily or land development or commercial or more commercial properties? So they do need extra capital and even some debt service strength as well. So sometimes you need to raise more capital or work with a money partner to facilitate that. Now, it's not just about money partners from a joint venture perspective. You can actually share knowledge and experience and acquisition and work together and actually bring a partnership where both are actually putting in money together. So there's multiple different things that a real estate expert will want a joint venture for. But the biggest reason, and I would assume most people are very similar in this type of, are here, possibly here today, is they are looking to build their empire, right? And I see a lot of wonderful people here, so I'll pick on Cheryl a little bit. Cheryl's empire. Everybody wants to work on Cheryl's empire. So Cheryl, you know, I'm just teasing with you, but I'm sure that's part of the reason why you're here too as well. It's how do I grow and how do I expand? And that's okay. That's what we're all here trying to accomplish. So a lot of real estate experts are here, are looking for money partners or joint venture partnerships to scale, to grow, and because there's also been some limitations put upon them, which really suck. And trust me, when I went down this road before, I was so frustrated. Okay, so with that being said, not to get frustrated, it's about adjusting and pivoting, and that's the key discussion. So with that being said, there's a lot of reasons why real estate experts are wanting to joint venture. Makes sense. Okay, I don't have any money. I'm trying to scale my business and all this wonderful stuff. But let's talk to it from the money partner's perspective as well. Why should money partners be working with real estate experts? And that may be a question for a lot of people. They're just like, they've got money. Why would they want to partner with me? I don't know if anybody else feels like that. And again, sometimes we talk down to ourselves as, well, you know what? That person's got $1 million or $500,000. Why do they need to partner with me? And so these money partners, and we were all money partners at one point in time, they maybe have read a book or they've gone through, they've read a book or they're going through social media through Facebook or Instagram or YouTube or whatever the case may be. And they are learning, no different than many of us real estate experts when we first started, is, they've got this home equity line of credit set up. They've got X amount of capital, and we're supposed to use this money to go and use that capital from our home to make a better return than just sitting in the bank. Makes sense to me. That's exactly what we did as well. So they also have the capacity to borrow for other mortgage approvals as well. That's what they have. They also have a drive to improve their financial future, just like us real estate experts as well. We're all driven. We're all trying to succeed. They've set everything up. But the problem with a lot of money partners is, and this is the biggest one, they lack the experience or the knowledge in real estate investing. They just don't know where to go with this. They don't understand which market to invest in. There's more confusion now than ever before, because especially us that live in Vancouver and those that live in Toronto, they're just like, well, the markets are changing. Prices have dropped 20%. I don't know where to kind of position this thing now. And so now you're telling me to go to a completely different market. So it can be a very frustrating and confusing, and more importantly, a very uncomfortable position that they don't necessarily know where to go. The other part that they're struggling with is they just don't know who to talk to when it comes to a network of people to help them purchase this. So they don't have access to an investment team. And you've heard about this. We've talked about it a lot, is that you should have an investment team that understands the business of real estate investing, and better yet, they are real estate investors themselves. So for a lot of money partners, they just don't have the relationships, they don't have the contacts, and they don't have the investment team to make them feel most comfortable about this decision for themselves. They don't have access to quality investment properties. And one of the most common ones, it's not the number one, but the most common one, money partners look for real estate experts to do a joint venture partnership, is lack of time. So for myself, I've got a lot of doctors and dentists and chiropractors in my joint venture pool, and they're very, very busy people, very, very busy. And so for them, that's the main reason. They've got the capital, they don't have the knowledge. Their biggest issue is time, and they're busy in their practices, and it's very, very common. Okay. So let me ask you guys, what do you guys think the number one? I said that wasn't the number one. What do you think the number one reason is money partners look for real estate experts to work with? What's that thing that they're lacking, or what's their biggest concern? What's their main reason why they want to work with a real estate expert? Why do they want to? They've got the money. Okay. They technically could go get educated if they really want to get over that hump. But what is that main reason that they don't want to do it on themselves and they want to work with the joint venture partner? I'll see if anybody's got it. So I got Danny saying time. Okay, that's a good one. Anybody else? Let's see real quick. What else? Understanding of real estate. Thank you, Cheryl. That's partially. The biggest reason why most joint venture partners want to work with a real estate expert is because they are absolutely scared to death. Okay. What do you think they're scared to death of? Okay. I'll throw that out there as well. Okay. So the number one is they are scared. Okay. They may go get some experience. They may have that knowledge, but they're absolutely scared. Okay. So with that being said, it is fear. And even for myself, I've got money partners that have been extremely educated. They are really, really educated when it comes to the real estate investing world, but they just are struggling and having a hard time going over that obstacle and pulling the trigger. And so they want to work with somebody. They want to work with somebody to overcome that fear. And correct, Cheryl. That's correct. Cheryl, fear of failure. Excuse me. So that's the key one, and that's the same thing. I've had a lot of investors that have had to wanting to work with myself because they were just too scared to fail or make a really big mistake, and they're just like, Mike, I'll let you try it first. Let me feel comfortable first, and then after the fact, I will try it on my own. Okay. So I thought I'd keep this really simple. And again, for a lot of real estate experts that are on the call and even money partners, this is a very common occurrence, this joint venturing thing. So I thought I'd pull a little bit of an analogy together. Okay. Why people joint venture. Okay. So put yourself in this person's shoes. Okay. You tell somebody that you've always wanted to skydive. So this is you. Okay. And you've always wanted to skydive. But then somebody just gives you a parachute and Mike, here's the parachute. All you have to do is jump out, wish you the best, and we'll see you at the bottom. And that's kind of the instructions that you tend to get. There's no instructions, no lessons. It's just, here's the parachute, get on the plane, off you go. Wish you the best. Okay. So how's that person feeling that's on this plane? Okay. Probably not very, very comfortable. They want to have a really positive experience, but they're feeling like they have a very lack of education and knowledge and literally being kind of thrown out the window, really, in reality. And so in this situation, a lot of money partners can feel very similar in this fashion. So with that being said, to have a little bit more of a positive experience, they may bring in somebody that can go do a tandem jump as well. So now they've got some instructions. They come along with you. An expert shows you what to do. They let you pull the cord, all that wonderful stuff. And now you have that positive experience, and it's not as scary because you're leaning on somebody that's hopefully not going to do anything wrong, and more importantly, just have that wonderful experience. And joint venturing in the real estate industry is exactly the same. So for a lot of people, for a lot of money partners, set up my HELOC. I've read this book. Now what? And some people, they go out and start buying properties, but they really haven't taken the time to actually learn. But for people that have really taken some time, they've absorbed it, and they're just like, you know what, maybe I do want to partner with somebody just to get my bearings a little bit, just better understand it. And so it is kind of like this individual as doing a tandem jump, so they feel a little bit comfortable. So as a real estate expert, this is a great analogy for you to even reference. It's very, very similar in this fashion where as real estate investors, you're educating yourself. You're taking the time to learn more. You guys are here on a Sunday night, Sunday afternoon to learn. And so kudos to you versus others that are maybe out on their boat or enjoying a barbecue and all that wonderful stuff, which is great as well. But here you are serious about your business and you're looking to grow. Okay. So the important thing is this, there are pros and cons that go with this, and we'll talk more about this, but very, very similar. This is exactly what a joint venture partnership would look like. It is having that experience, doing it solo yourself, and being scared and fearful of making a mistake. And it's very, very common that these individuals can make mistakes because they've not taken the time. Or you can partner with somebody that's already been doing it or has been educated in regards to how to grow and expand their real estate business, have their investment teams, understand the markets, to have a very positive experience for both sides. Okay, so let's kind of go over a little bit about the roles. Okay, and this is a really large part about what our company actually does, Prosperity Real Estate Investments, which is my company. Okay, so with that being said, as a money partner, this is kind of what they do. This is their role and this is their responsibility. Okay, so in a lot of cases, the money partner here, they're just really kind of providing the capital. They receive cash flow payments every single month or every single quarter, and then they receive a market update. Okay, so those are some of the things that they tend to get every single quarter. So this is their roles, that is their responsibility, and that's their expectation. Okay, so at the end of the day, that's kind of what the main objective is for the money partner. There's really not a lot of involvement very often. So for those that are watching that are money partners, if that sounds like you and you don't want to get involved and you just want to get a return in investment, that's your role. Now, as real estate experts, your role is much, much different, actually. And so this is your responsibility. And so with that being said, these are some of the things that we put in there, location analysis, property analysis, they put the purchase agreement, investment package, due diligence, property checklist. They source out property managers. They either are self-managing or do the tenant screening with the property manager. Bookkeeping is part of the responsibility of the real estate experts. Regular quarterly statements or semi-annual statements, and also distributing cash flow payments, right? So these are just a few of the things, and not to mention some of the other things that as a real estate expert, we should be doing, okay? So market analysis, continuing to educate yourself, continuing to expand your business team, talking to economic development officers within the areas, annual reviews, possibly marketing with monthly newsletters to your partners. These are common things as a real estate expert you should be doing. You may look at this and like, wow, that's actually a lot of things that I do. And it is, okay? But that's why you get paid what you get paid, as we talk about structure in day number 3 of why you get paid what you get paid, okay? So this is really, really important for both sides. The money partner at the end of the day, yes, they're putting up the capital, they are possibly securing the mortgage side of things. And then at the end of the day, the real estate expert is pulling all the other stuff together, okay? So really the real estate expert, they manage all of the details of the business, and really the money partner contributes all of the capital. And at the end of the day, what we're trying to do here is kind of create this kind of win-win relationship. So really we have clarity to what the roles are. Okay, it's very, very simple. We all understand what the roles and the objectives are. And then more importantly, the objectives are in place for the investment and the strategy is also decided. Now it's time to execute together at the end, okay? And really with a whole common goal of being successful, okay? The main key and the main focus that we're trying to accomplish is we want this. We want it to rain on us. Anybody want that to rain on them? Anybody wants that money raining on them? I know I do. So with that being said, that's kind of really what the focus is. And it is a great visual. And the focus is that is the main objective. We are sharing resources. We are sharing experience. And together, we're collaborating together to make this a very positive and a harmonious relationship where we're both going to be successful at the end of the day. Okay? So with that being said, you know what? Joint venturing can be great. It really, really can. But there are also a lot of pros and cons that come along with this. So let's kind of start off with the pros and cons. So let's go off with the pros and cons. But let's start off with maybe some of the pros. Okay. So some of the pros are as follows. Again, it's a great way to collaborate some of the resources that we have. We have an individual that's got the capital, has the ability to qualify for the mortgage. They also have the ability to qualify for the mortgage and have the capital. Okay, so those are the main things. Okay, and they also have an interest to improve their financial well-being. Part of the other pros is, again, it's access to knowledge and expertise when it comes to the money partner. So for the money partner that does not have this, now you do. And so you've got somebody that may have that knowledge and expertise. And for those that are just getting started and they're just like, well, I've never done a deal before in my life, that's okay. It's not that it's dead in the water. In fact, I know a lot of my students that have no experience that have been able to raise capital on their own, because they've really built a really good reputation. They know what they're doing, and they had confidence. The money partners had confidence in them in regards to their knowledge, and that was really, really key. So yes, you as real estate experts, you don't necessarily need to have experience, but if you have the knowledge, you can raise money as well. But again, that's the reason why money partners want to work with you, is that you're knowledgeable. And if you have expertise, that's fantastic too. They obviously would like that as well. With that being said, it's also sharing of risk and possible liability. And this might be a weird thing for a lot of people, but in some cases, and depending on the structure of your joint venture partnership, a 50-50 split, I'm going to talk about different scenarios about this in a later date. You share on the pros, the benefits of the deal, so any of the profits that come along with this. But depending on your structure, you could also be sharing the liability. So if this property takes a hit and we're about to lose $20,000 in totality, and it's a 50-50 split, the real estate expert may also be taking 50% of that liability, as well as the money partner. So as a real estate expert, is that something you are willing to do or not? And if so, and you have to have confidence in your acquisitions to do so, then again, it's a pro for the money partner, because not only you as a real estate expert may not have any skin in the game, but you have skin in the game because you're sharing the liability side. So as a money partner, they may look at that and say, hey, that's pretty fair for us. Okay. Now for the real estate expert, it is good because you share on the profits. If you've got yourself a great deal and a good opportunity, giddy up. And this is a great way where you're not putting any of your own money in, but you are doing all of the work. Okay. The working partner is working hard. Exactly, Cheryl, in your comments there. And that's the truth. Okay. So they work extremely hard. So for money partners, they deserve everything they get because they're busting their butt, because what you have to do is very minimal compared to what your real estate expert needs to do. Okay. The best part about it is you're going to get better resources for deals and capital. So it can work really, really great. You can work at bigger deals. You can work at better deals. For the money partner, you can get access to deals that you will never be able to get to because you just don't have the relationships and maybe the experience and the long-term time that these individuals have put in to build that investment team to get some of those amazing deals in front of them. Okay. Now, with a joint venture partnership, yes, there is risk that comes along with it as well, but there's a better chance that it's going to succeed you got a better chance to succeed as a money partner versus trying to do it on your own, because you've got somebody that's backing you up, that could be able to share their knowledge and experience, and probably have a network of possible mentors or coaches or colleagues to kind of help support them through this whole process. And again, this could be unlimited opportunities for both sides. For the money partner, it's endless opportunities because your real estate expert is always going outsourcing. And same thing for the real estate expert. It can be endless opportunities. Once you've learned how to raise money, really the world becomes your oyster, and you can just raise money to do multiple different projects and bigger projects, all these different things that you can do. And it's like that initial image on our marketing piece is like the guy just has all this money coming to him. It's raining, it's working well. And that's how a lot of people scale. And that's from the real estate expert side and even the money partner side. So there's a lot of pros that come along with this as well. Now, there are some cons. So I'm going to be honest with you. So let's talk about some of the cons. Okay. So part of the con, and this is always a struggling one for a lot of our money partners, is I got to share my profits. Oh my gosh, less equity on the deal. I got to split this. This is frustrating. Mike, are you asking 50% of my profits? Oh my gosh. Yes, it is a con. But again, you don't have to do any of the work. You're putting on the capital side of things, but you're not necessarily doing all the work. So it is a con from the money partner side in some cases. And it's also a con from the real estate expert, because the real estate expert's got to take all the responsibility, all the work and energy and effort that goes into this. It is a lot of work. For our investors that are on this call that have already been raising capital, is it a lot of work? Go ahead and share that in the comments, because it is. There's a lot of work that comes along with this. So like I said, that can be a con for the real estate expert. Again, for the money partner, there's a little bit of lack of control because you're not managing the day-to-day operations. That's what you hire the real estate expert to do. So they are managing all the day-to-day operations, all the aspects that come along with the property itself. That is their responsibility, and you've entrusted them to do exactly that. So making sure that there's clarity behind clarity with that. And for us real estate experts, you should also understand, and you should have that very clearly communicated, that is your money partner going to be allowed to make some of those decisions as well, or is that solely your decision? Or how do you do a voting structure in regards to whose decisions are what? Okay, so be aware of that. More often than not, it's the real estate experts, controlling really all the direction of the property itself. Don't get me wrong, there's lots of discussions that are had with our money partners for sure through the process of the acquisition, and we'll talk more to that as well. Okay. So you want a good, you can't, one of the cons can be an unreliable partner. And that goes both ways. The money partner can be extremely unreliable as well. You're coming to the 12th hour in regards to closing, and all of a sudden that person disappears. That's a real problem. And same with the real estate expert. Is that real estate expert, do they actually really know what they're doing? So again, you got to do your due diligence on each other and making sure that it's the right fit. Okay. Now, there can be potential disagreements. That goes with joint venturing, and it also goes with business partnerships. So how do we come to terms to making sure those disagreements get resolved? And we'll talk more to that at a later date as well. So now, with that being said, it can be a lot more difficult to exit. And so with that being said, you may have one party wanting to stay, the other one that is wanting to get out. So it's not as simple as, again, it's just like any other type of partnership. You've got to come to the conclusion one way or another. And so if one person wants to get exit out early, then you got to be aware of that. Okay. Project terms, goals are not clearly defined. This is one of the most common mistakes I see with people for all the years I've been doing this. If they've not provided clear definition of goals and project terms from the very, very beginning. So for those that are looking to do so, this is really important, guys, that everybody understands what's the timeline with this project. What are the objectives that you have? So then everybody knows once it hits those specific thresholds that you're looking to possibly dissolve the joint venture partnership, or you're looking to continue it. Okay. But again, the key piece, and one of the cons, it can be a pro or a con. You are tied together like a marriage. And we're going to talk more about that as well. You guys are there to work together. And so hopefully you have a common respect for each other. And more importantly, that you guys were able to work together for the next 3, 5, 10 years together. So I got to ask yourself that, but that can be a con when the relationship is not going very, very well. Okay. So with that being said, those are some of the pros and cons that kind of come along with joint venturing as well. Don't get me wrong. It can be a fantastic relationship. I've got joint venture partners I've been working with for years and years, and they've got multiple different projects. And again, just continuing to use the same joint venture capital that we've been able to be very successful with our projects and repurposing them into yet new projects as well. So if you do this well, do this right, again, you can repurpose and recirculate that money over and over and over again. And like I said, the problem of having lots of money, not enough deals, it's true. Okay. So with that being said, these are some of the pros and cons that kind of come along with this. Okay. But just like anything, if there are cons, the key is not to dwell on the problems, and more importantly, just try to find solutions that make the most sense. Okay. So if you are looking to partner up with someone else, again, it's really important to try to uncover what potential issues that may arise and how are you going to address them if they do come up. Okay. So that is really key. So again, for a lot of us real estate experts, we don't have enough money to expand our portfolio for the real estate expert. And as the money partner, you don't necessarily have the experience or knowledge. The problem that you have right now is not having enough money or not having enough experience or knowledge can be solved from a solution perspective by coming together, collaborating together, and by working together and having similar goals. You guys can be much more successful in this game that we call real estate investing. Okay. So really at the end of the day, you have a choice. And with that choice, you have this. You can really hope for the best and try to venture on your own. So money partners, there's nothing stopping you from going out and trying to do this on your own. Nothing at all. And it's not a negative thing. I know a lot of people have done it. And so with that being said, you can take a little bit more risk if you haven't had that knowledge or experience and you try to venture on your own. But again, if you collaborate with somebody else, there's probably a better chance that you are mitigating some of that risk as well. And same with you as real estate experts as well. You can just continue to try to save enough money and then buying your next property. But your progress is going to be extremely slow if you're trying to accomplish it this way. So by partnering together, and if you look at some of the most successful investors that are out there, some of the more long-term investors out there, they've gone through this process of partnering up with people, bringing in resources that the other person has, and having more success and scaling at a much better rate. And more importantly, they're all accomplishing their goals together. And that's a real key. Okay. So with that being said, I'm just about to conclude today's presentation. So here's just kind of a conclusion and just a summary before we wrap things up for tonight's session. Okay. Understand the role of the money partner and real estate expert. So if you guys are going down this road, make sure it's very, very clear. I kind of provided a quick slide showing kind of the money partner's responsibilities and also the real estate experts. That is just one option. If you've got your money partner heavily involved or doing some of the aspects of this, make sure that the roles are crystal clear from both sides before you guys go into this partnership together. You don't want to have any confusion. Again, this is where disputes tend to happen. Make sure it's crystal clear between both sides of both the real estate expert and the money partner. Everybody understands the rules of engagement and then pushing together, both growing together. Also, make sure one way or another, ensure your partner has similar visions and similar goals as yourself. So again, real estate experts, do you have a very similar goal of what your money partner has? Money partner, does your real estate expert have a similar goal to you? So take the time to get a chance to know each other. But the most successful partnerships that I see is where common goals are, when the goals are common and they are both focused in the same direction versus one focused on one way and the other in a different way. So the more you have that dialogue, the more you have that clarity amongst what your guys' goals and visions are, the more successful your partnership's going to be, and you'll have a fantastic long-term relationship for sure. Okay. So the other thing that I'm going to highlight is when you are setting up your joint venture partnership, and we talked about understanding the roles. What happens in a situation of a worst case scenario? So if challenges happen, have you discussed or planned these things or documented what happens in a worst case scenario and how do you execute this appropriately? Most of this stuff is done through a joint venture agreement, which we'll talk at a later date. But before it gets structured in the joint venture agreement, there's got to be this common discussion between you and your partner. Everybody needs to be all on the same page together. And then by doing so, you will have much more success. The more you dialogue, the more you communicate, and the more there's clarity, it just makes it a much more successful relationship amongst both parties. And again, you can have a very, very long-term relationship with your partner. Okay. And then the last question that you got to ask yourself as a real estate expert and a money partner. As a money partner, is this partnership going to get me closer to my goals? Okay. Real estate experts, you're asking exactly the same thing. Can I work with this money partner for the next 5 or 6 or 10 years? And based on the way that this thing is structured, is this getting me closer to my goals? Yes or no? That is always the question that you ask when it comes to partnerships or even your investment deals that you're looking to purchase. Ask yourself, is this going to get me closer to my goals? Yes or no? If the answer is no, then you just move on and you just maybe find another partner that's better suited for you, or yet even a better deal as well. Okay. So these are just a few key points that we talked about today. But again, the important thing is communication, understanding the roles, understanding what a joint venture partnership is and what it looks like, and then making sure it's structured properly. And again, we'll get more into detail about what that is, but having that clarity will help you guys be much more successful by having that understanding between both sides. Understand, as real estate experts, what is your system? What is your strategy? What are those things that I do that I want to be able to present to my money partner so they have clarity and, more importantly, can make that decision that if they want to work with me, yes or no. And then last but not least is when you're having that dialogue, don't just talk about all the sunshine and roses that come along with the deal. Be open and dialogue about some of the, if a challenge does arise, how best do we deal with this kind of stuff? So we all are on the same page together. Okay. So with that being said, that's tonight's session. I hope you guys enjoyed it so far. And again, thank you guys for watching this training session. And I hope you found value to it. And again, for tomorrow's session, we will continue our series. And tomorrow's session is how to find each other. How do you guys find the money partners and real estate experts? And more importantly, what am I looking for? What am I going to be looking for in a partner as well? Because that's kind of important. So again, we have another great session tomorrow, 4 p.m. Pacific Standard Time, right here on the Savvy Investor YouTube channel. So again, hopefully you'll be able to join us again for tomorrow's live session. And again, for those that are even watching the recording, please type your questions, your comments. I can see them. I'll do my best to make sure I get all these questions answered. And again, if you haven't had the opportunity yet or not, please just do me a small little favor, subscribe to our YouTube channel. We thank you for your continuous support on Savvy Investor, and we ask you to continue to support us on our YouTube channel as well. So again, thanks everybody for joining us. And I'm looking forward to seeing you guys all tomorrow. See you then. Bye now.